Hello, everyone. This is Simon with AvaTrade, and we're starting our webinar, How to Trade the US NFPs. And if you could please do me a favor and confirm by typing OK into the chat or question window, that would be great. Please confirm that you can hear me. Okay, wonderful. And also, do you see the slide that says Masterclass, How to Trade the US NFP? Please type yes. Wonderful. Thank you very much. Thank you for your help. I appreciate that. So I'm covering for Naeem today. He asked me to cover for him for this webinar. He got caught up with other things. And I'm happy for this opportunity. And I hope this will give you some practical benefits at the end of this webinar. So before we go any further, as usual, I would like to read this to you. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be construed or applied as investment advice, recommendation, or suggestion. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 71% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. And you can find, of course, the full statement at avatrade.com official website. So again, I want to welcome everyone. Maybe we'll give another few seconds for people that are coming in. And before we go, as we're waiting, what I'd like to know a little bit, if all of you or some of you, whoever feels comfortable, would like to write or type in and into the question, just type length of your trading experience, and yeah, that would be great, just to get an idea about the audience, what level of experience we're having here. Please go ahead. Wonderful. Great. We have a nice diversity. Someone with 4 years, someone with 1 month. Anybody else? Few years on and off. Okay. Couple of months. Thank you very much, guys, for sharing this. Very good. So in return, I'll share with you my experience, and just not to show off, just to tell you that doesn't matter how long you trade, you still have a way to go. And even if you think you know a lot, market will prove you that market knows more. And we'll talk about it today. I've been trading and working in the industry for the past almost 22 years. I started in June of 2000 as a proprietary trader back in New York. And for about 10 years, I traded equities, just day trading. I worked in the proprietary companies. And later on, I left the day trading and I started to do more of kind of a longer term, maybe swing trading, a little bit of investing. I just went away from day trading. And currently, I work at AvaTrade. I work with customers. And of course, I continue trading, both day trading, swing, and a little bit of investing. Okay, thank you very much for sharing this with me, and we'll move on. And this is pretty much our agenda for today. We'll talk about the importance of NFPs and what what does it mean NFPs, and what instruments we will be or could be paying attention to. And we'll definitely try to discuss the current state of the market and what's happening. We'll try to define some levels and some strategies. Okay. And again, I like to make it interactive. So if you don't mind, I'll be asking you to participate as well. And this is another time when I do that. How many of you use the NFPs or trade during NFPs or pay any kind of attention and take serious the NFPs? If you could write a few words, that would be great. Thank you. Okay. Thank you, Frankie. Thank you for being honest. That's great. You have no experience with it. Okay. I'm glad you're here, so we'll try to clarify things for you. Not very often. Okay. Please feel free. There's no, we're not giving any grades. We're not judging this information. It just for me to understand a little bit where you're standing as far as certain events and the style of trading that you do. Okay, so let's move on. So, what's the importance of NFPs? Um, no idea what NFP. Thank you, Troy. Um, the truth is, I was going to say it later on in the session, but I think I will start from this. So I make everybody's life easier, including myself. I took this from one of the providers of economic calendar, and I just took a screenshot. So we'll just read it. I don't want to pretend that I'm smart or too smart and pretend these are my words. These are not my words. That's a general knowledge of NFPs. And let's look at it together. America's most monthly job reports considered the most important economic indicator for the Forex traders. Released on the first Friday following the reported month, the change in the number of positions is closely correlated with the overall performance of the economy and is monitored by policymakers. Full employment is one of the Federal Reserve's mandates, and it considers development in the labor market when setting its policies, thus impacting currencies. Okay, I would add here, of course, not just currencies. Currencies is just a small part of it. It affects everything, including commodities and equity market, of course. Let's move on. Despite several leading indicators shaping estimates, non-farm payroll tend to surprise markets and trigger substantial volatility. Actual figures beating the consensus tend to be USD bullish. Okay. Just later on you can take a screenshot of it or you can just Google it. It's fine. Just for your information. Now we'll get to this thing that I highlighted, and you will understand the whole thing, and it will take a lot of stress off your chest. Let's move on. The non-farm payroll released by the U.S. Bureau of Labor Statistics present the number of new jobs created during the previous month in all non-agricultural businesses. The monthly changes in payroll can be extremely volatile due to its higher relation with economic policy decisions made by central banks. The number is also subject to strong reviews in the upcoming months, and those reviews also tend to trigger volatility in the Forex board. Generally speaking, a high reading is seen as positive or bullish for USD, while a low reading is seen as negative or bearish. Although previous month's reviews and the unemployment rate, this is the most important part of it. Please pay close attention. All the previous month's reviews and unemployment rate are as relevant as the headline figure, and therefore market's reaction depends on how the market assets them all. This is the key thing over here. So we can be smart, try to predict, try to see things and so on, but the market will do the same. And now it's actually I'm speaking from myself, and I'll share with you one of my favorite sayings I use a lot with my customers and people that I work with in the industry. You know, even if they told me today exactly the numbers on NFPs, okay, so let's move from this. Uh, Take a look. So we have NFPs. This was the last reading. The 678 jobs were added. Now they're expecting 480,000, and then we'll see what happens. That happens on Friday. Now, as I was saying, even if they told me today that let's say this number will be the number coming out, or it's going to be a 200,000 job or 2 million jobs added, even if I know if they just whisper into my ears exact numbers, There's no way in the world that I can make the right prediction what the market will do. Okay, and going back here depends on how the market sets them all. Okay, so what does it mean? Why am I doing this? Take your to the area that you don't really know. So what's exactly the point of this webinar, right? If I don't know, we can just stop this webinar and forget about it at all. And of course not, because there's a way that we can prepare ourselves for it. But again, uh, something that I the idea of being perfect or making the perfect trade, I give up on that idea about 8 years ago. After 14 years of really struggling, I made a lot of money, I lost a lot of money, and I like to be perfect in all of my trades or anything. And then I just realized there's no way I can control the market. The only way that I can control is the level of my risk, either in percentage or in dollar value, whatever it is. I need to have a plan as far as controlling my risk. And that's something that I would like to bring to you, understanding that you can never predict the market. You can never know what exactly will happen, even if you know exactly the outcome of certain news. Okay. Now, as far up until this point, if you have any questions, please ask them. I'll be happy to answer before we move further. All right, no questions. Let's move on. I guess everything is clear. Okay, so let's go back to the NFP. So we have the numbers coming out, and like I said, this is the numbers expected. Another big part of this report is actually unemployment rate, and that's something that really closely being followed by the decision makers. And as you know, that we in the process with the Feds in their last meeting, they actually started to increase the interest rate, first time in a long time. Let's put it that way. Okay, there was a long time of printing money and assisting economy. It all started in 2008 with a global, you can call it recession or collapse or whatever that happened that caused a big issues. Everything fell, real estate fell, stock market fell, everything else. So the Feds started to really um, and it started the quantitative easing when they uh, starting to throw the money into the economy, trying to really support it so we wouldn't really lose the economy. Of course, few banks or few financial entities went belly up, and the rest of the businesses were saved. And today we're in a pretty strong economy. Okay, so this is the number. Now let's go to today's day, and this is, I guess, part of the reason why we're doing it today, because what we're trying to do in about 2 minutes, we have this report coming up, the ADP employment change. Now they compare two of them, and because of this report comes usually a few days before the NFP, so it gives a little bit of the indication of what the NFPs might be. Okay, and when this number comes out, we'll switch to the trading terminal, and we'll be seeing how the instruments are moving. Okay, and just to give you an idea, for those of you that never saw NFPs, how the market reacts, the volatility of ADP is very small. I mean, it's still going to be volatile. We'll see some moves and spikes up and down, but this is only a fraction of what the NFP is doing to the market. So the volatility is double or triple during the NFP numbers. Okay, and that's something that I wanted to bring to your attention. So let's take a look at the instruments that pretty much being the most affected by the NFP numbers. And of course, the US dollar, this is the dollar index. Okay, and take a look, this is the 30-minute chart. So for the past 30 minutes, the dollar index has been moving higher. Gold at the same time is moving higher as well, and the equities are moving down. This is the S&P 500. This is the Dow Jones, and this is the Nasdaq. All three of them together moving lower into the numbers. And I'm just trying to find out in a moment what the numbers really are. And okay, the numbers are out. So the expectation was 450,000, and the numbers came of 455,000. Okay. Now take a look what happened. Why am I saying that we really don't know how the market will take it? And if you let's take S&P as a major indication. Take a look into the numbers. They indicate the S&P 500 sold out, and this is the first 5-minute bar with the numbers. Okay, and take a look. That's what you will see on NFPs. You will see a few minutes before, during the announcement, and maybe another 15 minutes to an hour, you will see crazy moves. Take a look. 5 minutes before the announcement, you see the bar or the candle is larger than any previous candle for the longest time. Okay, and if you take 30-minute chart, you can see it over here. Okay, and again, trying to analyze it, trying to understand what happened. So the numbers are good, right? The numbers are good, and normally it would be also good for equity market. Okay, I'm trying to explain to you the logic behind it. And before I go further, just explain what happened. Before year 2000, I came to trade in 2000 when the dot-com bubble started bursting. Before that, it was normal, logical trading. Good NFPs meant economy is great. The indices are going higher. S&P higher, Dow Jones higher, Nasdaq higher, equities, individual stocks higher, dollar strong, and so on. Now, then it started being, with all this quantitative easing later on, it became a little bit upside down as Feds continued to print the money. As long as the economy was doing bad, the printing was going on, and the printing itself was better for the market than the good news, and that continued until now, actually, because now what happens now is actually the Fed starting to reverse the process. The tapering, they already started a while ago, and now there's a next phase of increasing the interest rate, because now pretty much if you're a corporation or a business, you were able to borrow the money with no extra cost, expand your business, and that's how the economy grew. Now that the interest rate is increasing, and they will increase it at each meeting this year, we have probably another 7 to 9 increases, and we don't really know how big. The last one was 0.25%. Now they say the next one could be a 50 or half of the percent, and so on. So we don't really know how they're going to do it. And in this case, it's really confusing. Is the good news is a good news, or is it still a good news, or the bad news is a good news? That's why I guess we'll just take each day at the time and see what happens. And as you could see, as the numbers came good, dollar didn't go any higher. Okay, on the announcement. Let's take a look at 5 minutes. Okay, it moved into the news, but now it's not doing anything. And if you take a look at S&Ps, S&Ps are actually selling after the market. Okay, so let's try to. So this is the NFP. This was just the illustration for you how the volatility increasing into the market. So now our job is to, as I said, if we don't know what the numbers will be, so what's the point? I mean, if you don't know how the market will react, what's the point? And then we'll switch now to daily charts, and we'll try to actually see a potential scenarios for Friday. And we start with, again, with S&P 500 here. And I just want to ask again into the audience, any of you are trading US indices, or any indices for that matter? If you could let me know, please. Okay, wonderful. Nasdaq, Dow Jones. Okay, great. Great. So it's going to be relevant. It's important that I ask this question. So I wouldn't be talking about indices to people that have uh, not traded it. Great. Thank you very much for sharing. So we'll use S&P as a general thing, and I will try to go with you through few fundamental things and just to see what could be potentially happening with the NFP. So in general, okay, in general, if you look at it, take a look at the chart, we've been, we can try it even with the weekly chart. We made a high, all-time high into the New Year's, okay, and then we start. January came, the succeeded in closing the market the highs, so all the Wall Street were due for nice fat bonuses, and then they just let the real picture take off, and we really sold out. So now, uh, I'm going to talk to you in the Wall Street terminology so you'll understand. This move down, it was a correction according to Wall Street, okay? Anything more than 10% and less than 20% considered to be a correction, okay? So this move was a correction, and now the recent 3 weeks of the upside, according to the Wall Street analysts, we are out of correction. Why? Because we made a recovery of more than 10%. So it's been really bullish here. And funny enough, all this move started at 2 years after the drop on the pandemic, global drop on the equities. Okay, and then VIX were at the lows, and analyst says, "What the heck? It's time to buy," and they did, and the market recovered nicely. Okay, so up to here, up to this level, it was actually 10%. So we exceeded it. So going into NFPs on Friday, if you were to pay attention to indices, this level around here, around 45.70, 45.80, is a key level. Okay. Again, if the numbers are great and fundamentals supporting, again, to remind everybody, an unfortunate thing going on, the war of Russia-Ukraine injects a lot of chaos in the world, and of course, it affects the financial markets as well. And let's just briefly take a look at the key components of the markets that have been really, really affected by it. And that's the crude oil. It hit 130 before going lower. We had gold going higher, trying to actually, we did try the all-time highs. We were a little bit short of it, okay? And then, of course, dollar index moved higher on the news and so on. So we're still affected by the war. I believe all of us hope for that to end very soon. But as of now, unfortunately, we're still cooking in it. So going back to indices, the levels here around 45.70, 45.80, very crucial. So if we have another 2 days before NFPs. So again, what I'm sharing with you now, it's a very simple observation of the levels, which is the only thing that pretty much didn't change in all these years, hundreds of years. Why? Because for certain reasons, okay, you can call it funny reasons, certain levels, when they repeating themselves, they hold, like old supports hold, old resistance level hold, and so on. So over here, why this level? We made a lower low from here for around 45.80, and then we actually had a double top here that we failed. Before that, this level was a support, and then it broke through, and then it turned into resistance, and now we're back to this level. So going into Friday NFPs, okay, if we are holding this level, there's a possible scenario, if everything is positive and even some improvements coming out from the war situation, we could see actually a continuation to the upside around this level. So what we want to see, we want to see the price action around this level. Now, if we do dip below it and start really building a new resistance like we did here, so this attempt would consider to be a fake breakout, and then there's a big possibility of a market going lower. Now, what could add to negativity? If you're following fundamentals, a lot of analysts are paying attention to 10-year bonds, U.S. bonds, and they found there's a sign of recession by inversion, that certain bonds are having a higher yield than the others, and in their opinion, and that's historically showing a sign of possible recession coming in. And if you take the last speeches of Powell, when he said that they will do everything to fight the inflation, and this is the main reason why they start kicking in the increase in interest rate, because the plan was not to do it till 2023, even 2024, but because inflation is climbing rapidly and the war just added to it by bringing the commodity prices much higher, then what happens now, uh, that some analysts are connecting those things. The rapid interest rate increase could cause the inflation, even though the Powell assured everybody that the economy is so strong that it can sustain even aggressive or more aggressive increase in interest rates. So again, in the practical level, we'll be watching this level over here, and should we go lower, the level about of 200 moving average over here, it could be a possible support where there could be a buying activity taking place. As you could see here, again, going back to levels, it's not just the 200 moving average, it's also a support after which we made a high after really failing to break through this. Okay, uh, so should we go in this channel here between 4580 and 4500, the top of this channel would possibly be a shorting opportunity, and the bottom of this channel around 4500 would be the buying opportunity. Okay, somebody asked what software are you using. This is the MT4 platform. The similar MT4, MT5 platforms are pretty much the same. MT5 is the newer one, has a little bit more of a new options, but this is what it is. Okay, so that's as far as indices. And if you take a look at Dow Jones and Nasdaq, it's a similar situation here. Now, gold is usually another instrument if you take commodities. Any of you are trading gold, if you can quickly type in the question thing. This, I think we're running a little bit out of time, and I would like to cover a few more things before we end. Okay, wonderful. Thank you. So gold is a very popular instrument. It's directly connected to inflation and the US dollar. Thank you very much. Thank you. A lot of people trading gold. So if we take a look what gold did in the big picture, with the war, when the war started, we made this strong move higher. Like I said, we almost touched the all-time high that happened in 2020 in August. The high here was 2075, and the high over here was 2070. Almost touched that. And then yesterday we dropped on gold as commodities went up yesterday again. So there was a kind of a risk on day. And again, just for those of you who are new, the risk on means when the equities are in play. When you see individual stocks higher, indices of course higher, then that's the risk on. And what happens that risk of instrument are selling, and one of the risk of or safe haven instrument is gold. And not always, it's not necessarily 100% working, but there's the opposite correlation between gold and the equity markets. When the equity markets are risk on going higher, the gold is selling off. Like today, if you could see that S&Ps are selling and the gold has a green day today. So what can we expect on Friday with NFPs? We tested the 50 moving average here with this pin down, and so this level over here, as you could see, it was a support and support again, and we held it again here. So I don't want to be specific with the levels, 1908, 1906, pretty much between 1900 and 1910, I would say that's level of possible buying activity taking places. And because of yesterday pin, talking about the risk, that's something that I started with, at least a trader that would look to buy between 1900 and 1910, he would possibly take 1890 as a possible stop loss. As I told you, you cannot control the market, but you are, and you should, and it's a good idea to know where is your exit if you're wrong. This way, you actually preserve your capital, and in a simple way, you're not going to lose your pence. So if someone were to buy it around 1900 or 1910 with the possibility of it going to 1950, 1960, and possibly even higher, the market decides to collapse, anything could happen. So there's a defined stop, and it's great. For some reason, we stopped at this level. That means they couldn't take, the sellers couldn't take the gold lower than 1890. That means there's some buyers and serious buyers because there was a huge volume there, and somebody stopped that selling, and not only stopped, they actually bought it. So should the gold retest it again, that's again, nothing is 100%, but that could be a possible strong support around 1890. So that's another scenario for the gold. Okay. Now, dollar index, or I don't know if any of you trading directly dollar index, but just to show it to you how dollar index in the past months actually start jumping with the support. First, we had the support here at 96, and then we came to this level, to the previous high, and we established around 97, 97 and a quarter support. And then in the recent days, we made a nice advance move, and the 99 became a very serious level that initially we broke through, and then we start building a resistance here. So with the dollar index, we're pretty much having a channel between 97, 97 and a half, and 99. Okay. Now I know a lot of you are trading US dollar, euro US dollar, so we'll try to see possible scenarios here. And again, going into Fridays, we can take yesterday day as an indication. And that means that low of yesterday, which was tested few times, take a look. These huge tails are about the same level, around 109.60, 109.50. And yesterday we bounced from it and we went to retest the highs. So it's clearly that in the past days, we established a nice channel over here. And take a look again, speaking of levels, why did we hit over here? Why this is a resistance? Because it's a mirror level of the previous one. It was a support, and then it failed to be support on the second attempt, and then it became a resistance. So clearly 111 to 111 and a half, it's a nice resistance here. Okay, and again, how the numbers are going to come? Are they going to match the idea of ADP numbers that we watched today? Are they not? We're going to have a plan here, and the plan is the trader could look for possible buying opportunity. Now he could be totally wrong by buying here, but take a look. 2 days ago we were at 109.44. So if someone were to buy at 109.60, 109.50, a 10, 20, a 30 pip stop for some people would be an acceptable risk. Again, you need to take into consideration your own equity on the account, the size of a position you're trading, and so on. But potentially, if a trader was to buy on the numbers or into the numbers or during the release of the numbers, 109.60, 109.70 with the risk of 20 to 30 pips with the potential of 100 to 150 pips, it's a nice correlation. If you're risking 30 to make 100, it's more than 3 to 1. So that's as far as euro dollar. Okay. And again, some of you I know trading DAX. It's not directly connected to US news, but as you know, in today's days, everything is global, and US markets and US news releases affecting global markets as well. And here we can also establish some levels here and take a look. It looks like 14,200 around here was a support that we couldn't break before breaking out to the upside. And yesterday's high was around here. And again, take a look. Why did we stop here? Because that level was a support and turned to be resistance. Take a look, like we held nicely here, 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 and here until we broke through it. We had a nice recovery. And where do we stop? At the level that previously was really, really strong established support, which became a resistance. What a beautiful thing. So again, should the NFP come weak or strong, we should watch the dynamics of the market and possible a shorting opportunity around 14,930 to 940 and a buying opportunity around 14,200 over here. Now, again, this is as of today. Into Friday, this level could actually become a resistance. Should we sell off before the Friday? We still have 2 days. We're talking about as of now, this is our current channel of field of action on DAX. Okay. Any quick questions, guys? I would like to answer them. We're already behind the time, but it's okay. I'll take a few more minutes to answer your questions. Do we have any signal groups? Okay. We don't have signal groups, but it depends on what regulations are on. We actually have something they called Ava Social, and that's a network of traders that you can follow and even copy some of them, but actually it's not available for all the areas. What time is the previous day low? I'm not sure about the question, but the previous day low is if you take the daily candle. So this is the today candle, and previous daily low would be yesterday low over here. If you take a look at the current chart, okay. So on this time frame, it's a daily chart, okay. So if you want daily levels, you take daily chart, which is right here, D1, and the previous candle, it's always the high of the previous day and the low of the previous day. Okay. Thank you for your questions. And again, just to remind you this, the market will do whatever the market wants to do. You have to have a simple plan, a simple scenario, and you have to have a risk level that, I call it a pain tolerance. You need to take as much pain as you can handle. And that also relates to financial pain or losses or risks. Okay. I want to thank everyone for joining us this webinar, and I hope this was practical and useful for you. And you can follow us at AvaTrade on Twitter, and YouTube is being filled every day with new information, new webinars, including this one. By the way, if you'll be watching this webinar on YouTube, you can subscribe to our channel, and you will get notification if you choose to click on that small bell there, and you will be receiving notification when new webinars or new information is being added to the channel that we have. My network was not good. Yes, possible for the recording. Yes, this webinar should be posted shortly to our channel on YouTube, so you can watch it or rewatch it. You can share it with your friends if you'd like as well. Okay. All right. I want to thank everyone. Be prepared. Have a plan. Manage your risk and stay safe and healthy. All the best, everyone.